Most of the money in trading gets made in just a few explosive moves. The market sits flat for days, and then one candle does a week's work in just 1 hour. And here's what every beginner gets told. When the big news hits, Fed meeting, a CPI print, stay out, it's too risky. That's backwards. The quiet before the news is the most valuable thing on your chart. Read it right, and you're in before the move, not chasing it. Volatility splits traders into 3 camps. Some are scared of it. They wait for a quiet market that never comes. Some chase it. They see a big candle, they jump in, and they get trapped at the top. Then there are the ones who learn to read it, like a surfer reading a swell. They see a wave forming, they paddle in, they ride it. And when you get that timing right, there's nothing like it. Because here's the truth. You can have the direction right and still lose. The right trade with the right levels, but the wrong timing. You weren't wrong, you were early. But in trading, early is still wrong. That's what volatility controls. Not direction, timing. When the market moves and how hard. And it follows one rule that never breaks. Low volatility always comes before a pump or a dump. The longer it stays quiet, the bigger the release. Picture a volcano. Calm on the surface. Pressure building up on the inside for years. And then, eruption. All at once. The market does this on repeat. The whole skill is reading the quiet before the move. So let me show you the tool that reads it. But first, let me save you some time. When you get into trading, you get pointed to 2 famous volatility tools, and both of them will let you down. The first one is the VIX. You've probably heard of it. Remember that movie, The Big Short? Or the business news playing in the background? It's like a fear gauge for the stock market. When big investors panic, it spikes. And here's what nobody tells you. The VIX is built for the stock market, and it moves on a slow, long time frame. For a mom trading her way towards pin money this week, it's interesting, but it's not actionable. So you have my permission to forget about it. The second tool is Bollinger Bands. These actually work. 3 lines wrapped around your candles. When the market is quiet, they squeeze together. And when it starts moving, they widen out. Here's the problem. By the time you've added your EMAs, your Fibonacci, and your trend line, let me show you, it's quite a mess. Making your charts harder to read, not easier. So that's the old way. A VIX you can't really act on, and Bollinger Bands that clutter your chart. Here's the new way. The BBWP. Bollinger Band Width Percentile. Don't worry about memorizing that. It takes the exact same intelligence that the Bollinger Bands give you. How compressed or how expanded the market is. And it turns it into one clean reading below your chart. Same signal, none of the clutter. And here's the part that matters. The BBWP is built to work with your system, not fight it. Because good trading was never about one magic indicator. It's 3 things working together. Price action tells you direction, momentum tells you strength, and volatility tells you timing. 3 sides of one triangle. And the BBWP is the volatility side. And it's the side most beginners are missing. Just like all our indicators, this is a quick one to add. All you do is go to your indicators tab, type in BBWP. You want to select the version from the caretaker. Once it's at the bottom of your screen, double click on the indicator to adjust the settings. There's one setting worth knowing about, and it's called the look back period. That's how many candles back the BBWP looks when it's working out what counts as normal for this market. I usually set mine to 150. Then if you scroll down, you get plot extreme high and plot extreme low. You can set these to 95 and 5. That's just to filter out some noise. Press OK and you're good to go. Now the bars. 2 colors, blue and red. The blue bars mean the market is quiet, volatility is low, and price is barely moving. I know, that sounds boring, but blue is what you actually want to see. Remember the one rule from earlier? Low volatility always comes before a major market move. Here it is on the chart. Those blue bars are the market loading energy. The more blue bars you see, the more pressure has been building. And remember the news from the start of this video? This is where it pays off. Blue bars stacking up before going into a Fed meeting or a CPI print, that's compression at its tightest. Right before the catalyst hits. Everyone else is being told to stay out, but in fact, the market is loading. Like a coiled spring. The tighter the compression, the bigger the release when it finally goes. Red bars mean that the market is already moving. The energy is being released right now. This is a terrible time to get involved because volatility also means unpredictability. Here's the trap. If you only notice the trade because you saw a big red bar and a massive candle, you're already late. It's like showing up to a sale when the racks are being packed away. There might still be something left, but all the good stuff is long gone. Blue bars are your signal to pay attention. Red bars are your signal to be careful. And if you've already taken a trade and red bars start showing up, that's your signal to think about taking some profits off the table. There's also a line that runs through the bars. That's the moving average of volatility itself. It tells you whether volatility has been getting calmer or more active over time. The line also changes color as it moves on. Cooler colors when things are quiet and warmer colors when things heat up. What you want is the line sloping down or sitting flat and low in cool colors. The spring is coiled. What you don't want is the line spiking up quickly into warmer colors. The move is already underway. This is particularly important when you are looking for an entry. The 50 mark is your neutral zone. When the line is sitting around 50, the indicator becomes less useful. We're in no man's land at the moment. It's not your trade. Wait for it to drop down below 35 or even 5. One quick thing before we keep going. This is video 6 in a free series. One skill at a time. No fluff, no paywall. If that's why you're here, hit subscribe so the next lesson finds you. Check out the playlist on this channel. It's called Trading 101 for Moms. Right, let's finish this. Here's exactly what I do. By the time I look at my BBWP, I've already checked my fib levels, my trend line, my EMAs, and my stochastic. Then I ask these 3 questions. Number 1, are there blue bars in recent history? If yes, the market is compressed. The move likely hasn't happened yet. Number 2, is the line sloping down or sitting low? If it is, compression is real. Energy is building up. And number 3, has the blue bar reading gone below 35 or lower and started moving back up? If volatility is genuinely low, a move is loading. All 3 pointing the same way? That's a green light on timing. Not a guarantee, but a strong confirmation that right now is worth paying attention to. Now I move down to the 1 hour to find my entry. And I'm looking for the same things to fall into place. I place my risk reward, my stop there, and my take profit on my fib levels. It looks good, so I'm entering here. As you can see, price moved up. The BBWP went to 92% and hit my first take profit. So I take 50% off the table. But then price came back down to my trend line and we were technically still under blue bars. So I could have re-added here if I wanted to with an even better risk reward. Price then kept going up with my red bars appearing right at my second take profit. I leave 25% as a moon bag and I'm happy with how this played out. When the bars turn red and the moving average pushes above 90, the energy has been released and the move is mostly over. Take some profits off the table and maybe leave a small moon bag running just in case there's more upside. One thing I want you to take from this lesson: waiting is not missing out. Blue bars are your permission to be patient. Add the BBWP to your charts this week. And then test 3 checks on your charts with any trade that you're planning. Remember to log what you see in the journal, the free one in the Moms Who Trade app, so you can see how you perform. This lesson took me the longest to actually get, and it changed everything about how I trade. Try it for a week, you'll see what I mean. See you next time.